there, this is James, and you're watching the latest episode of Hashtag Ask James. And a very good afternoon to all of you, and all of you a very happy Wednesday. In today's episode of Hashtag Ask James, we are going to do the topic of introduction to the RSI, or the Relative Strength Index. But before we get started into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Now, like I said, this is Tixee Live presents Hashtag Ask James. Those who are unfamiliar to this series, it's a little bit different from the Tixee Live I do every day, which focuses on market developments. Tixee Live presents Hashtag Ask James is pure education. Okay, well, we dedicate a whole live video, still live, because live means live. We dedicate a whole live video or live stream on an educational topic of your choice. And you send in the topic of your choice, and then, like I say, I'll go off and I'll create a video just for that topic. And today's topic has been sent in by a frequent viewer, and is introduction to the Relative Strength Index, otherwise known as the RSI. So special thanks, a special shout out to viewer Train and Trade for the suggestion. I really, really appreciate it. Thank you so much. And like I say, these little videos are based on topics sent in by you good people on subjects you want us to cover. So a big shout out to that individual. Now, let's get started. Relative Strength Index, or RSI, is a momentum indicator. Okay, so what is a momentum indicator? A momentum indicator, or indicators, are used to determine the strength or weakness of an asset's price. Okay, an asset's price. It determines as well, it determines this by measuring the rise and fall of an asset price. Okay, so it's a calculation, complicated calculation. Luckily, we don't have to do it because the indicators are available on your charts. But it determines the strength of an asset's price by the rate of the rise and fall of the asset's price. So how quickly is rising and falling? Okay. Now, there's many popular momentum indicators. This includes moving average, convergence, divergence, and today's topic, which is, of course, the Relative Strength Index. So starting off with, of course, what is the Relative Strength Index? Well, developed by J. Wells Wilder Jr. in 1978, so the RSI is as old as me. The Relative Strength Index is a popular momentum indicator used in technical analysis. The RSI measures the pace and magnitude of the asset's recent price action to try and identify if an asset is overvalued or undervalued. Okay, the RSI is displayed as a line graph, and it goes through a scale of 0 to 100. And this can indicate if an asset is overbought or oversold. And this can also indicate a potential change in direction of that asset. Now, the reason why, and I'll reiterate this point several times during this video, the reason why it's important to find out or try and identify if an asset is overbought, because if an asset is overbought, then what will happen? The market potentially will start selling that asset off. So that asset will start to sell because we run out of buyers. Okay, and it changes direction, so it starts to head downwards. If we can identify if an asset is oversold, then the market runs out of sellers. So then potentially that asset can change direction and the market starts buying in again, pushing it up. Now, the levels are we use to identify potentially if an asset is overbought or oversold. Remember I said the chart ranges between 0 and 100. But the levels we use to recognize if an asset's oversold or overbought is 30. If it's under 30, it's oversold. If it's over 70, it's potentially overbought. And it looks a little bit like this. Okay, it's a terrible drawing. I do apologize, but I was trying to give you an illustration. But in reality, it looks more like this. Actually, before I move on to that, as you can see, what I mean by oversold, overbought. So if the RSI line comes under 30, okay, indicates potentially the asset is oversold. So the market may start buying in, pushing it up. If it's over 70 range, then the market sees it potentially overbought and might start selling and pushing the asset down. In reality, it looks a little bit like this on the chart. As you can see, it's actually on the bottom here. So this is what it looks like on the chart. So it's nice to see what it looks like on the chart, but let's have a look at what it looks like on a real chart and how we actually insert it into the chart, so to speak. So let's pull it up, pull my chart up here. Let's change this a bit so we can make it look a little bit easier. So we've got Bitcoin at the moment. Let's look at Bitcoin. So what you do, you go to Insert, Indicators, okay, Oscillators for momentum, okay, because it's also an oscillator, which I'll probably do a video at some point. Go down and choose Relative Strength Index and click OK. Boom. We now have it on our chart. Okay. So as we can see, okay, we have the range here. We have 0 at the bottom, and then we have 100 at the top. Then we have the 30 level, and we have the 70 level. Now, this is a 1-hour chart on Bitcoin. Okay, so remember the theory. Okay, if it goes below 30, potentially the asset is overbought, oversold, so the market might start buying in again. If it's over 70, then potentially the asset is overbought and the market might start selling off again. Like this, for example, and the 30 oversold. So as we can see, okay, on this illustration, we actually pull out a little bit so we can see a better picture of it. Okay, so let's start from, say, let's move back to this level here. Okay, so here we're at the 70 level. This is on Bitcoin on a 1-hour chart. It goes over the 70 mark and the market starts selling off. So it starts changing direction. It then hits again under 30 quite dramatically. And the market soon after that starts buying in again. Not a very strong buy, though. This is one of the limitations in RSI, which I'll talk about in a minute. Again, drops below 30. Around that period of time, the market again starts buying in again. Under 30 again. As we can see, the market once again starts to buy in again, pushing it higher. Goes above the 70 level. And then eventually, again, this is another limitation of the RSI, goes over 70, the market starts to sell off again. Okay, gets under 30, again, indicating potentially oversold, market starts buying in again. Again, goes under 30, market again starts buying in again, as we can see here. Okay, let's choose another asset. Let's choose the sterling, for example. Okay, because it's all about the sterling at the moment, isn't it? Let's face it. It's all about the sterling at the moment. So again, we're still on a 1-hour chart. And again, the sterling is an interesting case at the moment because there's another limitation to it. Because at the moment, and we'll look at it as on a daily as well, so we can have a look at it in a clearer picture. Okay, it's obvious because the sterling, as we know, is in a downtrend at the moment. So there is a benefit of using the RSI on both the ranging market more so than a trending market. But anyway, this is 1-hour chart again. As we can see here, okay, it hits above 70, market starts to sell off again. Hits above 70 just though, and the market starts selling off again. Okay, hits below 30, indicating potentially, sorry, let's just do this one first. It goes under 30, again, hinting potentially the market is oversold and the market starts buying in again. Goes under 30 again, indicates that, hey, the market is slightly oversold again and the market might start buying in again, which it does so. Goes under 30 again and the market starts buying in again. Okay, so as you can see, it does give us some potentially clear buy and sell signals. Now, the indicator, okay, like I say, is an early warning indicator. Don't forget. Okay, early warning indicator. What do I mean by that? It means it's when it goes under 30 or goes under 70, doesn't mean straight away the market's going to react straight away. Okay, and as you can see, look here, for example, here, okay, it was over the 70 level for quite a while before the market started to sell off. Okay, And again, as we can see here, it was under the 30 level for quite a while before the market started buying in again. Okay, and again here, under 30 for a while before the market started to react. So it's an early warning. So it gives you the heads up, potentially, the market might start buying in again or selling again. Now, let's do one more asset as well. Let's do another. Let's just choose, let's choose the euro dollar. Now, that is the euro dollar. Let's choose, say, the cable, which is really dramatic at the moment. Okay, the cable. I thought it was the cable, it wasn't. It was the sterling. And this illustrates to me some of the limitations that the RSI has. Okay, because it does have some limitations. Okay, and that is if you have something which is dramatically in a move, moving dramatically. Okay, because this is based on because it's displaying some momentum. Okay, if there's an extreme move of the asset, then it can stay in an overbought and oversold zones for a very long time. So it means the market not necessarily giving you a clear image, okay, that there is a good buying or selling opportunity because it's the trend. Okay, so this is why it's better on a ranging asset. And we'll look at an asset which is ranging at the moment to illustrate it's a little bit more accurate with a ranging market. So like I say, we know the drama. We know the drama we've had with the sterling over the last couple of trading sessions. And as we can see, this move here, initially when it fell under 30, it was under 30 for a long time before it reacted. So it stayed in the oversold territory for a long time. Obviously, with the drama on the sterling over the last couple of trading sessions, again, we fell under 30 again. And of course, usually that would indicate potentially oversold. Maybe the market might start buying in again. It stayed in that region for a very long time. And the other imitation to this, and this is why I say it's better in a ranging market, and we'll find an example of a ranging market in a minute, which will show us some sort of better signals. And like I say, if we're looking at a trending market, if we really think, for example, look at the dollar yen, for example, we know if we put this on a daily, this has been on an uptrend for a long time. Okay, again, this is on an hourly chart. So this is now on a daily. So it's been on an uptrend for a long time. And this is the limitations the RSI has, in my opinion. Okay, now that's been a uptrend. This is an uptrend. So here, okay, we can see it is in the 70 mark, but a small sell-off. Even though it dropped down here, indicating a possible change in direction, the market carried on moving. Again, we're in the 70 region, indicating potentially that it's overbought, but the uptrend still continued. Over 70 level, still on uptrend. Okay, we had a small sell-off here, but again, 70 level, small sell-off, but we're still keeping the momentum. This is why, for example, on an uptrend for a trending market, if you identify a trending market, the RSI cannot necessarily be that accurate, okay, because it's not fighting the trend. It's pricing the dramatic moves of the pace of the move of the asset. So that's the limitations. However, it can help you. It can help you identify if there's a change in trend. Okay, if there's a change in trend. So say for example, okay, say for example, you're looking at your chart and you think you see a potential of a change in trend. So it's been on an uptrend, and now you can see, maybe using your channel lines or moving averages, like we discussed last week, the moving average crossover. Where the faster MA crosses over the slower MA, indicating a change in trend. So you see that, okay, and then you think to yourself, okay, that is an indication that we're having a change in direction. Can I back myself up by looking at another indicator? And this is potentially then when you use the RSI, because what you will do with the RSI, okay, is you engage on a 50 level. Obviously, we've identified already that it's ranging between 0 and 100, and the two key levels we tend to watch is the 30 and the 70. But there's another level, which is the 50 level. The 50 level. If it's crossing 50, at the same time you're seeing another indicator indicating a change in direction, then that potentially is also indicating to you that indeed we are looking at a change in direction. So that again is where it can become useful in identifying a change in a trending market. So if I bring this up to, again, let's have a look. Let's have a look at an example here. So I can find an example for you. So let's add this to the stream here. Okay. So like I say, we had that big dramatic sell-off, didn't we? Again, with the Bank of Japan intervening with the dollar yen. And obviously, we fell under the 70 level. It was nothing to do with the RSI being there. It was to do with Bank of Japan. Again, another limitation is not taking account other situations into it. And it falls under. So at this point, at the moment, if we're looking for it's currently trading around that trend line, it's not looking like it's changing direction. And if you look at the RSI at the moment, it's currently trading, like I said, at 64. So not at the 50 level. But if it's under the 50 level, then potentially is indicating in changing direction. So let's say, let's have a look at, say, the euro. Let's have a look at the euro dollar. Look at, say, okay, euro dollar again. Okay, let's have a look. Let's put it on a daily. Okay. So currently we're at 24. So that again indicates to us, yes, very much is still in a downtrend. If we look at the sterling, where's the sterling at? 17. So it's actually way under the 30 as well. Still indicating that, yeah, again, this is a downtrend. So the RSI is telling us, reaffirming us, this is indeed on a downtrend as well. So yeah, that's the thing with the RSI. But like I say, if you can use it on, like I say, it tends to work better on a ranging market. The key things to remember is make sure you identify if you're watching a ranging market, obviously, and you can identify a trending market because that's where it does become more useful. But there's key things to remember. Remember, again, if you're watching in a ranging market, if it's overbought, market might start selling off again. So over the 70 level quite dramatically, market start to sell off, not straight away, early warning indicator, so get prepared. If it's oversold, the market might start buying in again. So it's way under the 30 on a ranging market. Get ready to potentially start buying in again. Don't forget, you can ask me questions anytime you wish. Or if you want me to look at another asset with the RSI. Don't forget, these little introductions are basically, like I say, bite-sized pieces, okay? Bite-sized pieces. I will be doing a proper, full-blown educational webinar on the RSI, where I'll go into a lot more, such as the RSI trend divergence technique. So I will be doing a lot more of that in the future, a lot more meat on the bone, so to speak. So these are only bite-sized pieces. So yeah, let's say, is there any other assets you want me to look at potentially? Or did that make sense? Is there anything you want me to go over and discuss again? Anything in particular? I mean, okay, I can tell you my preferred time frame for the RSI. I tend to like, and I've got a ranging example here actually, which is quite good. I've managed to find one because at the moment everything is either, well, the dollar strength is all over the place. Let's have a quick look at this one. Let me show you this example. Okay, this is Bitcoin, and this is one of the time frames I quite like using on an intraday thing, especially on a ranging market. And as you can see, it is ranging pretty much at the moment between three levels. Okay, it's ranging around a support of $18,438. Okay, and really the first key resistance, potential resistance, is $20,355. But the key, in my opinion, is $21,937. Okay, so it's basically trading currently from really August between these two key levels here, with this being a little bit of an obstacle as well. So again, as we say, it's more of a ranging market, and I do prefer using 4-hour intraday with the RSI because I think it gives me a slightly clearer picture on a ranging market. Okay, so let's start off. This is the range. Okay, since, like we said, since August, comes under the 30 level, market starts buying in again. Okay, comes under the 30 level, market starts buying in again. Touches, comes under 30 level again, market starts buying in again. Touches around the 30. Okay, gets pretty dramatic and starts buying in again. Goes above the 70 level quite dramatically, and the market starts selling off again. Comes again under the 30, and the market starts buying in again. And then we fluctuate. And it's just trading in between the two, and it's like a tighter range there. So that's, like I say, I think it's works slightly better. Again, this is my preference. I like using a 4-hour chart on a ranging market when I'm using the RSI. But the thing is, here's the thing. Like I said, I don't tend to use the RSI just on its own. I tend to like to use price action. And like I say, again, my point I was making about using the RSI to identify a changing trend. You wouldn't just look at the RSI and see it, being around 70, then dripping down 50, thinking, okay, that's it, the trend's changing. No, you use that to back up your opinion using you're using a different indicator. Like I mentioned, if you're using the moving average crossover technique, what we discussed in the moving average episode last week, if you see the crossover, then like the golden cross, you say, this is a potential change in trend. Let me have a look where the RSI is. And yes, the RSI is dropping down the 50 level. Yes, indeed, this is potentially, validating that we might see a change in trend of that asset. So, that's it. And like I say, don't always use the RSI on its own. I mean, again, some people may do. I personally don't. But anyway, that's the introduction to the RSI, a bite-sized piece. Is there any questions at all? Anybody like to ask me anything? Or say hi, maybe? Or did that make sense? Is there any part of that little bit I've gone through didn't make any sense? You want me to go over again? Okay, not a problem. Not a problem. If you think of a question later, you could put it in the comment section, either on Facebook or YouTube. I will see them, and I will obviously reply to them. Yeah, it's a good question. Can you use more than one indicator at the same time? Absolutely. Absolutely, you can. I mean, for example, let me pull my chart back up again. Like I say, again, the change in direction. Let's keep with Bitcoin. Keep with Bitcoin. Okay, so we've got the RSI up. And like I said, if I want to try and use the RSI to validate maybe a potential change in trend, I'll go to, obviously, trend, moving average. Let's do, again, don't forget we covered moving averages last week. So let's go do, say, 50. Make it a nice green color, multicolor. We say we go to indicators again, trend, moving averages. Let's say let's go 25, and we'll change the color to make it more easier for us to see. Say, not orange because that matches my candlestick. Not turquoise. No, we'll go for purple. Okay. So, remember, like we always say, if the faster goes under the lower, then it indicates a potential change in direction. Okay. And as you can see here, look, for example, this point here, okay, it was touching the 30. This is around the 50 level. So I see this crossover. I could potentially see that the RSI then is around the 50 level. Validates there is indeed a change in direction, and it did indeed change in direction. So that's how you can combine the two as well. Another question: what main indicators do you use? I'd be totally open. I do tend to use moving averages, occasionally the RSI, but realistically, what I tend to use more than anything else is price action. That's why I try and identify. That's why I often have a lot of lines on my chart. It's where I try and identify potential areas of interest where people have been buying from and selling from. At the same time, I do pivot points as well. I use pivot points a lot as well. So I tend to do that as well. But again, trading is personal. It's all very, it's all dependent on what works for you and your personality, obviously, who you are in yourself. Are you, I'm not an aggressive trader, for example. I'm extremely patient, but I know other traders are very excitable, things like that. Could you go into price action and pivot point? I could definitely do pivot points next time. Pivot points I can certainly do. Price action, again, we could look at it. We could do price action as well. Yes, we can certainly do an episode on that if you wish. Just because that's what I tend to do. But I do use moving averages as well. Certainly for longer trends as well. For position trading, I tend to use moving averages a lot. Is there any other questions at all? Anything else anybody like to ask me? Did it all make sense though? Did it wasn't too fast, it wasn't too overly complicated? I mean, again, like I say, it's an indicator which can work, but like I always say, all indicators don't work all the time, because understand the true mystery of everything. You need to take everything into account. And like I always say, yes, again, thank you. Oh, good. I'm glad it made sense. And it did make sense. Good. This is what we do it for. But like I say, don't forget, like I say, you've got to take into account the whole mystery. Okay. Technical analysis, fundamental analysis, market sentiment, risk, risk management. You've got to have a risk management program in place. And of course, psychology of the market. So there's so many things you need to take into account. Not one indicator will guarantee you winning trades. Not one indicator would do that. It doesn't exist. But all indicators, if you can use them and understand them, can help you with trading decisions and can potentially help you with a successful trade as well. So do bear that in mind. If there is no other questions, thank you, SMF 790, for asking and chipping in with some questions there. I appreciate it. Don't forget, if you have, obviously we got another suggestion of price action and pivot points, which I will certainly look at doing. I mean, pivot points is really useful when, for example, with the sterling, I found that very useful to use recently with the recent drama with the sterling. But anyway, like I say, if you think of a topic for later you want me to cover in the future, jot it down in the comments section, either on YouTube or Facebook. I will see it and I will dedicate another video just to that. And if you think another question related to the markets, also do the same thing. So you have that option too. Anyway, till next time, which will be in about an hour's time, actually, just about an hour's time, when I'll be covering the US session and the recent developments in the European session and the Bank of England, obviously, because that's what's caused a lot of drama today. But yeah, please come and join me for that. But anyway, as I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you've watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video, found it useful, give me one of these. It's nice to know that you like what I do. But anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.